Hi, I'm Connor O'Brien, CEO of O'Shares Investments, and with me today to talk about growth equities, old tech and new tech, Kevin O'Leary. How are you, Kevin?
Great to be here. Thank you, Connor.
Fantastic. What I'm going to open up with is just showing people a slide of what's happened to valuation trends in old tech versus new tech. This basically compares the price to sales ratio of NASDAQ 100 index stocks to the OGIGX index stocks. And what it shows is in recent several months, the valuation has become what we would call quite attractive for the OGIGX stocks, basically pulling back to what looks like about a 30% discount to the stocks in the NASDAQ 100. And I think everybody knows the NASDAQ 100 stocks have pulled back themselves. So if one is considering being either contrarian or just adding to tech positions because of belief in the future of technology, our suggestion, of course, is take a look at OGIGX and compare it to the NASDAQ 100 index or investments like that. Kevin, you made a fortune in technology, and you now have many, many companies that use technology. What are your thoughts on investing in technology going into 2023?
I think it's a very important sector, and let me tell you my thinking on it is, particularly during the pandemic, the entire world went to a new digital model, and much of it was direct to consumer. The economies have changed in almost every geography of the planet, and it's become very productive because they're using technology. No one knew what Zoom was in March of 2020. Now it's like Kleenex, everybody knows. And remote working has become the fabric of many societies. And some portion of employees need technology to be able to perform their function within corporations and small businesses. And so the data of selling direct to consumer is also very, very valuable. Large and small companies alike have found that, all driven by technology. When you go look at the new wave of tech companies coming through, they're not small. These are behemoths, and they're growing significantly faster than the traditional FAANG companies, which are now getting older in terms of how long they've been in the market, and their growth is slowing somewhat because there's all kinds of new innovation going on. And so when you're buying tech, you're really looking for the opportunity to ride that wave of growth. These companies grow 20, 30, 40% annually. You have to find them. You obviously want to check their balance sheets out. And the best way to do that is to index them, not just domestically, but globally. And that's what I invest in. It's something I find very important in my portfolio to capture growth over the long term.
Let me show people some metrics here on the growth in the OGIGX index. These are the different industry categories: enterprise, cloud, internet conglomerates, etc. Pay attention to the revenue growth rate column here. You got over trailing 12 months, you got 25% growth forward estimates. Revenue growth drives performance of these stocks. Let's look at the next slide. This bar chart answers the question why revenue growth matters. It was really helpful in finding the winners. The companies in this category, the tech category, that have the strongest growth rates have the strongest performance. So the top quartile by revenue growth have the strongest performance by quite a bit. So you really want to allocate your tech investing to own the high revenue growth stocks. That is in the DNA, in the design of the OGIGX index. Kevin, before we wrap up, just tell people what you have as an allocation to the OGIGX strategy going into 2023.
I have 20% allocated to it. It's the core of my growth in my portfolio. And I think it's the best way to position for growth, because you really want to be watching these companies' metrics and reconstituting for the very best within an index like this. And that's exactly why I use it.
That's great. Thank you very much for your comments. Thank you, everybody, for joining us today. And for more information, please just send us an email, info@oshares.com, or consult our website at oshares.com. Thank you.